So this strategy that you're looking at here, this is only half the story. This is the short strategy on this script that I've got running right here. The other strategy is the long. So I'll just open that up now. So you can actually pair these two together. This one has a higher win rate with a 69%, but it does have less net P. Both max drawdowns are under 20%. So I'll just go back to the other one, which is for the short strategy. As you can see, 992% net P. Win rate is at 45%, so it's flip a coin. And the P factor is 2.248. So what that means is that the average winning trade is 8.44% and the average losing trade is 1.32%. If this is your first time watching the Trading Circus, we focus on systematic rules-based strategies. And they've been created with the Systemation key. You can gain access to that. Just check out this video to find out about all its capabilities. The strategies will always consist of 4 components: entry requirements, stop loss placement, and your risk management of that stop loss throughout the trade. Is what I consider no trade zones. This is more of an advanced feature because the Systemation key allows you to use data from higher time frame charts to your advantage. The TP functions. These are critical. There are a lot of different options. They can actually make a substantial difference to the equity curve of your trading strategy. And just so you're aware, I'm not a financial advisor, and past performance of any strategy is not indicative of future results. In this video, I'm going to go over the strategy for the long and the short. This is on AVAX, AVAX on the 1 hour chart. Okay, so this is an altcoin, which is a larger cap mover. And obviously, there are lower caps that move a little bit more. But you won't see all the famous YouTubers pushing this sort of content on these larger cap coins as being good pairs to trade, because they can't move the needle when they're selling and you're buying when they've told you to buy. In this video, I'll go over these strategies for the long and the short. When these two are combined, the net P is 1,439%. And this is over a 2-year period. Now, these aren't actually that complicated. I don't think they are. But I'll go over each strategy with you right now so you can learn more. And I'll just show you how the Systemation key works and plots the trades on the chart just before I dive into what's actually happening. When it enters a short position, you can see that we get this little red arrow. And from that moment forward, it'll plot where we've entered. And then it fills this green background here, just showing us that we're in the money. If it's a short position, which this one was, which lost, you can see that it's entered and then it's been filled in with the red here in the background, and it closed out there for a small loss. When it enters and it goes down, you can see here that it says exit 2, and it'll say here exit 1, which was at this level where that arrow is. And then you'll see there's another exit hit here with just this green line, and another one down here at this green line. And you'll see it's got TP, TP written. These short positions often take aggressive TPs because they have the ability to take the most when the market flashes like this. So at this stage down here, it'll have sold out of about 90% of the position. But by leaving that remaining 10% in, it means that it could continue on for longer, but it also actually stops the script from re-entering as well. So it's like a double-edged sword. It sort of protects you from then going full size back in on another trade here, for instance. I'm not saying it would, but it could. And you'll see here that the stop loss is plotted by the line here, just above the entry on the trade. So over here, you can see that it's entered the trade. Once this TP was hit here, which was exit number 2, the stop loss has been scripted to automatically go to break even. So at that point, the trade was closed. And on your exchange, it'll technically be a loss for, say, whatever your trading fees were, but you're only talking a few dollars. And then yet again, it's entered this trade here, another short. It come down, took a take profit here, and then it got stopped out. So once again, you'd make a small profit, but it did re-enter another trade, and it's come down and it's taken its profit here, 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 and again all the way down here, and then it was closed out over here. So remember what I said, this is only showing the short strategy at the moment. Remember, we do have this paired up with a long strategy, just so that I didn't have it too much going on in the chart. Yeah, so then when it flipped here and it went long, and then it can do its thing. But I'll just turn that off, so I don't want to make it, I want to make it simple here. Okay, so the strategy settings for this one are, I'll start with the EMAs because that's the simplest to understand. So these clouds that you see here, they're EMAs. At the moment, when they're in a downtrend, they go purple. The EMAs used on this strategy are the 19 and the 75. When they cross, you can have an entry. Okay, so they have to be purple before you're allowed to take the short. The next setting here, which does make a significant difference to the backtest results, is that the distance from the 75 moving average, or sorry, EMA, is that the distance from the 75 EMA distance should be greater than -2. Okay, so to demonstrate that on the chart, I'll just zoom in here so we're a little bit closer. The slower moving EMA will always be the longer time frames. That'll be the 75. So here, when it was in an uptrend, it was at the bottom. And now it's in a downtrend, it is at the top. So what this setting means is that price should be greater than. So greater than meaning above -2%. So if the price is more than 2% below that slower moving EMA, it won't enter the trade. Okay, so think of the EMAs a little bit like a rubber band, and when they're fully stretched, just say it did close the position down here, because sometimes it may, we don't want it to then spring back and take an entry. We want it to take an entry when it's within 2% of that slower moving EMA. And what that does is it stops it taking the trade when it's a little bit too far overextended to the downside. So this is a good example. You can see here that we had a bearish candle, but it has rebounded slightly to get back within that 2% before it entered. The next setting is a no trade zone. So I classify a no trade zone as when I have an indicator or something happening on the charts where I don't want to trade this particular strategy. So in this case here, we have the RSI on the higher time frame settings selected for the 12-hour chart. Remember, we're trading, this strategy is on the 1-hour chart, but this condition is on the 12-hour chart. So if the RSI is below 35 on the 12-hour chart, it won't take a trade. Okay, so this is the RSI indicator here. The green is on the time frame, and the white one, which is slower moving, that's on the 12-hour. So when it's down here, when the white line is in this area, and it's only the white one on the RSI, this is classified as a no trade zone. So it won't re-enter a short when the 12-hour RSI is this low. The next settings that have been selected is the stop loss was increased by 0.25%. This just made a slightly better win rate, and obviously in doing so increased the net P. I'll show you the difference right now just so you can see. So if we deselect this, the net P is 747 with the win rate at 57%. And you might think, oh, that's great. Just remember that the P factor is 2.145. So if we select this again, so we slightly increase this. Now our net P is up to 992%. Yes, our win rate has decreased to 45%, but our P factor has increased. What that P factor is representing is what I showed you at the start, which is the average winning trade is 8.44% and the average losing trade is 1.23%. Okay, so on this one, just due to some quantitative analysis, I worked out the maximum stop loss percent. It is beneficial to have it capped at 7%. The take profit option here for number one is RSI across the level. At this stage, so if TP1 is hit, we sell 35% of the position and it's instantly bought to break even. So RSI across the level is 29. So when this green line on the RSI gets below 29, which is down here, it will instantly take profit. The bit that I like the most about this is that we're offloading 35% of the position. So that's how much is sold. And then I love the break even function. It instantly takes the stop loss down to our break even entry point, which means at that stage, it's a risk free trade in my eyes. TP2 is distance below the level on the moving average. So if the distance is below 3 minus 3.8 on the MOV, now I'll just show you what that looks like on here. So this is the MOV and 3.8 is about there. So as soon as price gets down on this indicator here to that level, you're going to look at this and think, oh, geez, that's not very low. Well, let me explain. Yeah, it's not very low. You're correct. But I have the break even function selected and we're selling 25% of the position. So at that stage, risk-free trade. So that's what these TPs are enabling us to do. We just take a little bit off the table, lock some away, TP3, exactly the same indicator, except now it needs to be at minus 20 and we sell 25%. TP4 was a quantitative analysis, and that's when price is 15% below the entry price. We sell 10% of the position. You guessed it, break even is selected. TP5, won't matter if this has got BE selected or not. Select it. It has, when the price is more than 20% below the entry price, we sell 35% of the position. So that's this one down here. And then from that point forward, or this is the distance from moving average TP all the way down here. At that from point forward, we just let it ride and we close the final position here when the EMAs cross. Just give you a look at this long strategy that it was paired with. And you can walk yourself through this. Remember, this is on the 1 hour chart. So we get a lot of price movement. We get a lot of entry and exits with this because it is a swing trading strategy, but on a lower time frame. And you can see quite clearly here that it's just flowing with the market. Yeah. So really, it's only taking whatever the market's willing to give us. It's just flowing with the market. If you like the idea of creating your own strategies, that's right, your own strategies with something that can provide you with a statistical edge, so to speak, where we started at the video, meaning that you're going to know that, say, in this case, for this strategy, your average, that's the key word here, is 8.44% for the win, and your average loss is 1.23%. So if that's something that interests you and you like the idea of having a statistical edge and being able to use quantitative analysis on the charts to help you create your own strategies, and if you like the idea of then being able to create these own strategies to your likes and dislikes, for instance, you might like to take the stop loss to break even instantly, or you might like to let trades just run for longer. All those options are at your fingertips. If you'd like to learn more about what's actually in this course, as in the program overview, at the end of this video, there'll be another video that pops up, which will be the program overview for the Systemation program. So you can have a deep dive, if you wish, to see actually what's inside this course. And I'll also describe who this course is not for and so forth. So yeah, you'll get a better look. There's a lot of information there to digest, and yeah, take that as you will. The course, but in a nutshell, the course has 14 modules. There's over 117 videos. They're all detailed. A lot of them are strategies and statistics, mind you, but they're different types of strategies and different timeframes and so forth. So you're going to be able to work all this sort of stuff out, what you like and don't like. So if that's something that interests you, link below. Okay, so the settings on this one, obviously there's a lot of different options you can do here. These are just how this specific strategy has been set up, but you can make these your own to your own personal likes and dislikes, what you like in a strategy. So this strategy here, it doesn't have as nice an equity curve, but it does go for the big wins when the market obviously runs. You can smooth this out with taking more TPs earlier in the trade. And you will smooth this out, but you will lower your net P. But you will increase your win rate. But yeah, you'll decrease your P factor. I just want to mention before we dive into this strategy, if you are running a long and a short strategy on the same sub account, then you need to ensure, obviously it's going to be on the same time frame, but you want to use the same EMAs ideally. The same as the last strategy, the EMAs used here. So this is where the EMAs cross and they turn yellow. We're at 19 and 75. This particular strategy also has a regime filter. What that means is that the regime filter is selected at the 600 EMA, and it means that price has to be above the 600. I'll just increase the thickness so you can see it a little bit easier. So on the chart here, that's why it hasn't entered the trade down here when the EMA is crossed. It did wait until it was up here before it entered. Same thing over here. It hasn't entered here. Oh, so the reason this was implemented, it didn't actually make a huge difference to from memory, it didn't make a huge difference to the net P. What it did do though is it dramatically reduced the max drawdown. So for me, that's very important. I like that. Eliminating risk is my number one train of thought at all times. This is obviously direction is long and the EMAs are in an uptrend and it will close the trade when the EMAs cross, which that enables it obviously to then go on the hunt for looking for short positions. This one also has a max stop loss of 7%. Okay, so in regards to the EMAs, the distance above the 19 EMA should be greater than 0. So that means that it will not enter a long position if price is below the yellow cloud. In this case, it is valid to sometimes have strategies that do that. But in this case, we're using this momentum, these EMAs, as being definitive of the trend. And by having them above the 19 EMA, that means that if we'd close the position up here, for instance, once this price has dropped below that faster moving EMA just there, let me just full screen this. This matters when you start messing with your take profits, by the way. But yeah, but by having it meaning that it's above this 19 EMA, it means that it won't take a long position unless it's above that fast EMA. This indicator is using the higher time frame stochastic indicator from the 12-hour chart, and it's using it to confirm trend direction. I'll go over that first. So what that means here at the bottom, I'm going to make this larger. Not only does price need to be in these yellow cloud, so not only do the EMAs need to have crossed and turn yellow, we also need to have the 12-hour stochastic have crossed and be in an uptrend, which technically means that the yellow line here on the 12-hour stochastic is above the purple line. So you have two confirmations of trend direction. And then obviously we also have the EMA regime filter as well. So there's a few buffers here for this one to kick into gear before it really wants to go. The other factor that this has is it has a no trade zone. So if the RSI is above 82%, it will not trade. So the condition here with the arrow pointed to the left means that it needs to be less than X. So if I open this up, that means that this is the 12-hour chart time frame. So that means that if the RSI on this indicator is in this box or basically anywhere above 82, this does not take an entry. Okay, so it has to be below that because we're trading on the 1-hour chart, but this is representing the 12-hour chart stochastic. So I'm considering this an area that I consider too high a risk and I don't want to be trading in that zone. So that has what I consider no trade zone. In addition to that, we have a no trade zone for the chart stochastic indicator, and it means that it needs to be above 19%. So if it's down really low, it won't enter. The strength of trend indicator has been used in this script. And for a detailed video on that, please watch this. This indicator means that if these grey bars are active, it will not enter a trade. It'll only enter when they're green, which means they're above 19. And it will only enter when this yellow line is yellow. If that line is purple, for instance, through here, it will not enter. So that's the higher time frame setting. So it obviously doesn't happen as often, but it does happen. And it's basically representing the strength of trend over a higher time frame. So if we zoom right out here, you can sort of see what's occurring. You can see that on the 1 hour chart, we're dipping around a bit, but obviously the strength of the trend on the higher time frame has massively dipped off here. So at this stage here, it's not going to enter along. Now, if we were to look at that, what that is on the chart, that's in this section here. So you can see that that would meant that this entry wouldn't have occurred right here. This entry would have occurred, but it would have been too high, and this entry would not have occurred because we've got the purple line. But in addition to that, we've got the EMA regime filter, which is above. What that does is it stops it taking a lot of trades when the market is ranging. This is a prime example. You can see here that it's just ranging. And we've obviously gone yellow. Yes, there's some moves in this, but all of it was below the higher time frame trend. So the higher time frame trend was not coming back up yet. It hadn't broken. And then it just entered a ranging zone. So at this stage here, it wasn't taking any trades. Just remember, cash is a position. You do not need to be in the markets at all times to make money. In addition to another no trade zone, we have the RSI on the high time frame setting is that it needs to be above 39. So if I select RSI, higher time frame, that means, and if you've watched the RSI videos, part 1 and part 2, you'll understand this concept, is basically anywhere in this zone, we will not take a long position. So the slower moving EMA here is what we're looking at. And it's just simply saying when the 12-hour chart RSI is this low, we're not taking a long position because this, yes, that is a mean reversion area. And yes, that is actually a legitimate, that is a trading strategy all in itself by taking out these lows on the rebounds when it's overextended. That's legitimate trading strategies. I can show you them in the future. But for this specific strategy, this has helped it not take trades basically in this chop zone. You can see that there's just a lot going on, but yeah, it'd be just chopping you up. So it really is trying to catch those moves. Now, the next volatility indicator is a big deal and is underrated. It's the PMARP. Okay, so for a detailed description on how this indicator works, please check out this video. You can see here that it has entered because we're above 55. So the way this works, basically, the higher the number, this oscillates between 0 and 100, the stronger the more volume that has been entered in the market, the stronger the wave, the stronger the push. So what that does, it's another way of saying this entire area below 55 is a no trade zone because it's showing us that it's weak. You can see here that it wouldn't have re-entered here if it wanted to. Okay, so we better go over the TP functions. TP1 is when the price is above the level. This is of the distance from moving average indicator, which is 19. So when it's this percentage, which I'm about to say, above the 19 EMA, so in this case, it's the faster moving EMA on the chart here. When price is greater than 4% away from that EMA, we take 35% of the position off the table. In this case, it was up here. It's a little bit hard to see. TP2. is the stochastic crosses the level. The level is 95. I'll show you that in a second because that's TP2. TP3 is another moving distance. So this one is level 11. So when the price is 11% above the EMA, it takes 35% off. So if I was to open this chart, how I've come about at working this out is I've looked at this on a historical point of view, and through doing quantitative analysis on the charts, I discovered that that is an extreme area for it to hit. It does hit this area. As you can see, it's come across here. It has hit 11% multiple times through here, 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 and then across it here. So if I zoom in, you can see that in this particular trade, because it's an extreme move, see how much speed is involved. This is a way of using speed to TP. If you'd like to learn more about it, check this video out. Okay, so this is the way I've managed to do it with the SYSTEMATION key, to use the ability of speed to TP in a systematic approach. So TP3 was we sold 35% of the position at 11% above the fast moving EMA, which is up here. So it doesn't happen that often. This isn't a TP that's going to get hit very often. Going back to the stochastic, I'll just show you, this is one indicator that will get hit a lot. I'll just put the stochastic indicator on. Go back and show you TP2. This level was 95. So that means that round about here, that means that when the stochastic indicator hits this level, we're going to TP and take some more off the table. And the reason I like the stochastic indicator for this purpose, we are on the hourly time frame. So in shorter trades, this can actually still get hit, and then we have a drawdown, for instance. So you can see on this particular trade, it hit right at the peak on this higher high. So it's just managed to scrape in, and we managed to take 2 TPs here at the local higher high, which is fantastic for an automated script. That's hard to do when you're manually trading. You have to be like nailed to the screen to pick up on it. TP4 is the RSI crosses the level, which is similar to the stochastic, but it is slower moving. So if that hits level 70, which in this case, that's this, it'll be here where that blue stops. So as soon as it hits level 70 here, this one will happen a lot more often. You're able to TP and take some more off the table and lock it away. In a nutshell, the RSI moves slower than the stochastic indicator, but taking 20% off your position at level 70 is a valid TPing area. It just helps you time your tops a little bit better. You can see here that it did time it right here, and it only takes it once the trade is entered, but it would have taken it a second time over here. In TP5, we sell another 20% of the position if the RSI crosses the level 80. So that was 70, this level here. So if it gets to an extreme read, which is level 80, which is here, and lock more away. So let's see if it did that. And it did. That was TP5. So again, this strategy has been created in combination with the other strategy. So when I have this set up and I have trade automation on, I'm trading this without even looking at the screen. The SYSTEMATION key simply provides alerts. So if I just click on Add Alert, I can go through here and I can set up an alert with the SYSTEMATION key for it to tell me when an entry signal has occurred, and it'll notify me when TPs have occurred and when we're closing the position as well. So instead of setting up your own personal trend lines and so forth that buzz you and give you an alert, this actual indicator does that for you. And then obviously we just ride the waves. If you're interested in getting access to the Systemation program, which has the Systemation key in it and all the course content that's available, so you'll get access to the full course, which explains exactly how to use the Systemation key in depth, in full depth. It gives you all the stuff that you need to know. Plus, I give you a lot of strategy blueprints to work off and iterate off so you can make them your own. And you'll also get access to the Trading Circus, which is a private group of people who have completed this course and made strategies with it. So, yeah, hope you liked it. Come check it out if you're interested.